On Thursday morning, 911.5 million shares of SpaceX become legal to sell for the first time. That's not a rumor, it's not an analyst guess, it's written into the IPO paperwork, a calendar that was set before the stock ever traded a single share. And here's what almost nobody covering this crash has done: actually read that calendar. I have. And I can tell you, the crash you've been watching, 50% off the high, more than $1.2 trillion erased in 7 weeks, happened before the supply arrived. The sellers haven't even been allowed in the building yet. Thursday, the doors open. And buried in that same calendar, there's a second date, later this year. I'd argue it matters more than Thursday, because it tells you where this stock's real gravity is by Christmas. And I'll put it on the screen before we're done. So here's what you're going to get in the next 25 minutes. What Thursday actually does to the price of the most famous stock in America, how to know whether your own retirement money is standing on the other side of this trade without your permission, and at the end, the one asset on the board that cannot do this to you. Not probably won't, cannot. The rules don't allow it, and nobody owns the rules. Friday afternoon, my own dashboard flagged the close before the news did. I'll show you how I set that up in a bit. First, let me show you my receipts, because this story didn't start this week. June 4th, 8 days before SpaceX went public. I sat right here, pulled the actual filing, and called the thing a trap at the top of a video, with the ticker still unlisted. Not because SpaceX is a bad company, I said the opposite. Rockets that land themselves. Starlink beaming internet to the middle of nowhere. Real, world-changing engineering. That was never the question. The question was the price. The filing showed a company that lost almost $5 billion in 2025, asking the public for a valuation near $2 trillion. Morningstar, one of the most respected independent research shops in the world, put fair value at $780 billion, less than half the sticker. A teachers' union representing about 1.8 million people wrote a formal letter to the SEC asking for extraordinary scrutiny because they could see whose retirement money was about to be steered into it. And I ended that video with one specific promise. I said, watch the insider lockup expirations because that's the next moment a flood of shares can hit the market. I said I'd be tracking it. That moment is Thursday. This video is me keeping that promise. But first you need to see how fast the trap closed, because the timeline is brutal. June 11th. SpaceX prices at $135 a share. 75 billion raised, the biggest IPO in the history of the world. The old record, Saudi Aramco, raised about 29 billion. This more than doubled it. June 12th. It opens for trading near 150 and closes its first day around $161, up 19%. Champagne everywhere. June 16th, the top, $225.64 intraday. Market value, roughly $2.5 trillion. For about an hour, one company was worth more than the entire German stock market. Then the calendar started doing its work. July 7th. SpaceX gets fast-tracked into the NASDAQ 100. Remember that date, it matters more than it looks, and we're coming back to it. July 15th. The stock closes below its own IPO price. 33 days. That's how long the deal of a lifetime lasted. July 16th. Starship's first flight since the IPO aborts on the pad. 4 engines fail to light at T-0. They flew it successfully a week later, and still managed to lose the booster on landing. And this past Friday, $108.37, the lowest close in the stock's short life, down about 50% from the June high. More than $1.2 trillion gone. Run that on a calculator. That's roughly $25 billion of shareholder money evaporating every single day, weekends included, for 7 weeks. Now, if you don't own SpaceX directly, you might be feeling like a spectator right now. Stay with me because there's a very good chance you're not a spectator. There's a mechanism aimed straight at your savings, and it fired on July 7th. We'll get there. Tuesday comes first. Tomorrow, Tuesday, August 4th, SpaceX reports earnings for the first time as a public company. The first report card this stock has ever had to show anyone. And here's why Wall Street is nervous about it. We already know what the last report card looked like, because it was in the filing. Revenue in 2025, $18.7 billion. Growing fast, genuinely impressive. Net result, a loss of almost $5 billion. And in just the first quarter of this year, roughly $4 billion more. Picture a beautiful apartment building with one paying tenant and a casino in the basement. The paying tenant is Starlink, 11.4 billion in revenue, about 4.4 billion in operating profit, a real business, a great one. The casino is the AI operation, XAI, which got merged into the company. And in 2025, the casino lost $6.4 billion. So when you buy SPCX, you're paying for the tenant and funding the casino. Morgan Stanley's Adam Jonas put a number on it just Friday. At $100 a share, the market is effectively pricing that entire AI operation at zero, or less. And the bills are growing. One analysis out this week, S&P Global's Visible Alpha, projects capital spending exploding from about $49 billion this year toward $118 billion by 2028, with total debt climbing from $42 billion to over $218 billion. They also just agreed to pay $60 billion for an AI coding company, paid substantially in shares. Remember that phrase, paid in shares. It's about to rhyme with everything else in this video. Here's the number that frames Tuesday better than any of that, though. The professionals paid to value this thing cannot get within shouting distance of each other. HSBC says it's worth about $115. Raymond James says $800. That is a seven-fold disagreement about the most famous company in America. When the experts' answers differ by 7x, that's not analysis anymore. That's theology. Whatever Tuesday's numbers say, though, Tuesday is just the trigger. Thursday is the gun. And to understand Thursday, you need one piece of market plumbing they never explain on the financial channels. Takes 2 minutes. It's worth your full attention, because this is the part that touches your money. SpaceX has about 13 billion shares. Total. That's the whole company. Do you know how many of those have been allowed to trade since June? About 639 million. Under 5%. Every price you've seen, the 161 first day close, the 225 top, Friday's 108, every one of those prices was set by trading in that thin sliver, while 95% of the shares sat frozen in a vault called a lockup. Here's the picture. Imagine a 100-unit condo building where only 4 units have ever been sold. A bidding war breaks out over those 4 units. Somebody pays a crazy number for one of them, and the county assessor walks in and values all 100 units at that price. The whole building gets marked at the price set by the 4 most excited buyers in town. That's an IPO float. That's how a company that loses billions was worth $2.5 trillion for an afternoon in June. Now here's Thursday. The vault opens, the first tranche of insiders gets unlocked, and 911.5 million shares become sellable. Do the arithmetic with me because it's short. 639 million tradable today, plus 911.5 million Thursday. The supply of sellable SpaceX more than doubles before Friday's open. Who's on the sell side? Employees, early venture investors, people whose cost basis isn't $135, it's pennies or single digits from funding rounds years ago. The stock is down 50% from the high, and they are still up 10, 50, 100-fold. You don't need them to panic, you just need them to be human. Some of them have been waiting a decade to buy a house with this money, and they're not even the last wave. That's the loop I opened at the top, and I'm about to close it, right after I show you why this isn't a spectator sport. Remember the date I flagged, July 7th, the NASDAQ 100 fast track? An index fund has one job: buy whatever the index holds. No human being sits there asking whether the price makes sense. The moment SpaceX entered the NASDAQ 100, every dollar tracking that index, The QQQ in brokerage accounts, the growth sleeve inside retirement plans, pension money on autopilot, became a forced buyer. Rules based, automatic. On July 7th, at July 7th prices. 8 days later, the stock broke below its IPO price. So check your own statements, because this is the part that lands on your kitchen table. If your savings track a NASDAQ index, and tens of millions of Americans' savings do, you became a SpaceX shareholder last month. You didn't choose it, you weren't asked. The teachers' union saw exactly this coming in May and begged the SEC to look. The machine bought anyway. That's what I meant on June 4th when I said the question isn't whether SpaceX is a cool company. The question is, at this price, who wins? Now you know who is set up on the other side of the trade. It has your account number on it. I don't track any of this by hand, by the way. My Macro Command Center dashboard watches it for me, and full package members can load their actual holdings into it and see in about 2 minutes whether they own SPCX without ever having chosen it. And if history is your guide here, it isn't kind. One review of the most hyped IPOs of the past 15 years found the average return in year one, measured from the first day's close, was minus 52%. Out of the whole hype parade, exactly 5 names finished their first year positive. 5. The IPO pop is the seller's moment, dressed up as yours. The short sellers figured this out early. About 30% of the tradable float is sold short, and they're sitting on roughly $8 billion of paper profit. When this many professionals are paid to bet on more supply and lower prices, they've read the same calendar I have. Which brings us to the second date. Here's the payoff on the loop from the top of this video. Thursday's 911 million shares are tranche 1. The calendar keeps going. Another slug on August 21st. Another on September 10th. A bigger one after the third quarter report. And then December 8th, the date that matters most, when the rest of the early holders unlock. Added up, and by year end, there will be roughly 5.33 billion shares of SpaceX free to trade, against 639 million today. The tradable supply of this stock is on schedule to grow roughly 8-fold between June and December. The float you bought in June is not the float you'll own by Christmas. Same company, same rockets, 8 times the sellable paper. And every step of it was printed in the filing before the first share ever traded, supply, on a schedule, written by the people on the other side of your trade. Elon himself is locked for a full year and keeps over 82% of the voting control either way. The captain isn't even subject to the weather he's selling you. Now stop and look at what this actually is, because this is the real subject of this video. Bigger than SpaceX, bigger than this week. Every paper asset you own has a supply schedule, and somebody else owns the schedule. A stock can unlock 900 million new shares on a Thursday, or pay for an acquisition by printing $60 billion of new ones. The Treasury runs an auction of fresh bonds every single week. The dollars in your savings account have an issuance committee that meets 8 times a year in Washington. And the next decade's project, they've told us openly, is to tokenize all of it. Your house, your bonds, the funds in your retirement account, everything on digital rails. Faster plumbing, shinier wrapper, same defect. Because a tokenized share of SpaceX still has a lockup calendar. A tokenized bond still has an issuer. Every single one of these things, old rails or new, has a man somewhere who can make more of it, and his schedule, not yours, decides what your savings are worth. So before your house and your bonds get their tokens, ask the only question that will matter on those rails. Which asset has no issuer? Go down the list. The tokenized bond, issuer. The tokenized house, a registry and a tax man. The stablecoin, a company. A government digital dollar, the same printer that got us here, plus a switchboard that decides what you're allowed to spend it on. Every exit they're building you has an owner standing in it, except one. You know where this is going because if you followed this channel for any time, you know the truth keeps landing in the same place. Bitcoin. and this week handed us the cleanest side-by-side I've ever been able to show you. Bitcoin's supply schedule was published in January 2009, before the first coin moved. 21 million. Fixed. Forever. About 19.9 million are already out, roughly 95% of every Bitcoin that will ever exist. New issuance runs about 0.8% a year, it cuts in half again in 2028, and it keeps halving on schedule until it stops entirely. Picture the difference as two vending machines. The SpaceX machine, the stock machine, the bond machine, the dollar machine, has a man with a key standing behind it, and he can restock it whenever restocking serves him. 900 million shares on a Thursday, 60 billion in script for an acquisition, a fresh auction every week. The Bitcoin machine was welded shut in 2009 with the dispensing schedule bolted to the front, in public, and then the key was thrown away. It dispenses slower every 4 years. No one can bribe it, vote on it, or sue it into restocking. In 17 years, through wars, manias, bans, and crashes, that schedule has never moved once. Now run Thursday through that lens. There is no Thursday in Bitcoin. There is no lockup tranche, no insider vault, no December 8th. There is no first trillionaire waiting for his 366 days to elapse. There is no board that can vote to pay for an acquisition in freshly printed coins, no over-allotment option, no secondary offering, no committee meeting 8 times a year. SpaceX's sellable supply will grow eightfold in 6 months, legally, on a published schedule its insiders wrote. Bitcoin supply will grow slower next decade than this one, then slower again, on a published schedule that no one wrote for their own benefit, because no one owns it. No company, no servers, only a protocol. And now the honesty beat, because on this channel every number survives a hostile calculator, including the ones that hurt. Bitcoin is sitting near $63,000. It started the year above 93. That's down roughly 30% in 2026, a brutal year, and I'm not going to pretend otherwise. But look at what did not happen on the way down. Not one coin unlocked early. Not one insider got a special tranche. No emergency meeting rewrote the issuance to save anybody's quarter. The schedule didn't blink. The price fell. The rules didn't. Show me one other asset in this entire story that can make that claim this year. If you watched my last video, you saw the same law working from the other side of the planet. South Korea's market just erased $2 trillion in 48 hours, an approved, regulated, government-listed trade, and on the worst day of that crash, Korean trading volume on Bitcoin exploded overnight. When the issuers changed the rules mid-game, an entire country stampeded back toward the one asset whose rules can't change. Now America's most famous stock is teaching the identical lesson with a lockup calendar instead of a leveraged ETF. Different door every week, same room every time. That's not me forcing a theme, that's the theme forcing itself into the news, week after week, and my job is just to keep reading it to you. You can even watch the difference inside Bitcoin's own neighborhood. Michael Saylor's strategy. The company that turned itself into a Bitcoin wrapper, 843,000 coins, just reported an $8.2 billion quarterly paper loss. And for the first time, it's been quietly selling coins to manage its own obligations. The stock is down around 38% this year, while Bitcoin itself is down 29%. Same underlying asset. The wrapper has an issuer, shares, obligations, a boardroom, so the wrapper bleeds worse than the thing inside it. The coin has no boardroom. That gap, right there, is the entire thesis of this channel priced in public, in one earnings release. I'm not telling you to buy anything. That's not what we do here, no certainties, only probabilities. But let me hand you the math the way I'd want it handed to me, and you can attack it with your own calculator. The world's store of value money, the wealth people park to carry value through time, sits somewhere around $900 trillion. Gold, bonds, equities held as savings, real estate bought not to live in but to store wealth, cash. All of it is exactly what this week put on display. Assets with issuers, registries, supply schedules, and unlocked calendars owned by somebody else. Now run a probability, not a prophecy. If, as everything migrates onto digital rails over the next decade, Even 15 to 20% of that pool moves into the one asset that cannot be restocked. Divide that by 21 million coins, and you land in the $7 to $10 million per Bitcoin range. Mark Moss has published that exact arithmetic. Hal Finney sketched a bigger number in 2009. Fidelity's models run the same direction on a longer clock. Maybe the migration is smaller. Maybe it's slower. Those are the honest debates. The debates about how much and when. Not about which direction. Because this week just showed you why the direction is what it is. Every other door has an owner standing in it. Against that math, $63,000 isn't a trade. It's the price of a seat in that question. And the seat got cheaper this year, while the question got louder. You do your own arithmetic. That's the invitation. Nobody worth listening to will ever shove you through the door. So here's how the week can go. 2 scenarios, no crystal balls. Scenario 1. Thursday gets absorbed. Insiders stagger their sales. That 30% short interest has to buy shares back to lock in its $8 billion. And the squeeze cushions the unlock. The stock stabilizes, maybe even bounces into the fall. It's happened before with hated unlocks. It is a real possibility. And anyone who tells you Thursday guarantees a crash is selling certainty they don't have. Scenario 2. The supply wins. The sellers show up faster than the buyers. 107 breaks, and the market starts walking the price toward Morningstar's math, and their fair value, $780 billion, sits around 50% below even Friday's close. Not zero, just gravity. I don't know which one we get. Nobody does. So here are the 3 signals I'm actually watching, and you can check every one of them yourself. Signal 1. Tuesday's report. 2 lines only. The Starlink subscriber growth number and the AI cash burn. The tenant and the casino. If the tenant slows while the casino gets hungrier, scenario 2 gets likelier. Signal 2. Thursday and Friday. Volume and the close. Does $107 hold once the new supply is legal? The first 2 sessions of unlocked trading will tell you more than a month of analyst notes. Signal 3. December 8th. Mark it on a real calendar. Whatever this week does, the big unlock is still out there, and the market prices gravity early. And one more thing to watch that has nothing to do with SpaceX. Watch what Bitcoin doesn't do this week. While Tuesday's earnings drop and Thursday's vault opens and Friday's jobs report hits, Bitcoin will just keep dispensing about 450 new coins a day, exactly as scheduled, exactly as it did through the Korea crash and the SpaceX crash and every crash before them. Boring. Relentless. That boredom is the entire product. Nobody ever has to sit up at night wondering what Bitcoin's insiders will unlock, because it has none. So here's the bottom line, one sentence. A price is an opinion, but supply is a policy. And this week you get to watch, in real time, what happens to your money when somebody else sets the policy. That's the whole lesson. SpaceX just made it visible. Bitcoin is the only asset that ever made it impossible. If you want to watch this unfold the way I do, instead of waiting for headlines, it's free, no credit card, about 2 minutes. Go to timtalksfinance.com/members. Take the money quiz, and it'll show you your net worth, what inflation is actually costing your cash in real dollars, and one move worth considering for your own situation. The live macro numbers on that dashboard are the same screen I've been reading from all video. And full package members can go further and load their actual portfolio next to it. I built it so you don't have to figure this out alone. Thursday morning, 911 million shares walk out of the vault. Now you know what that means, and you know which asset never built a vault in the first place. I'll see you after the unlock.